Welcome everyone to today's video in which we're going to take a look at the Disney company, ticker symbol DIS, because they are reporting earnings on Monday, and this stock has been struggling, as you can see, down 35% in the past year, although analysts have them rated as a strong buy with 22% upside. They reached a 52-week low of $80 per share around April, and since then, the stock has done very well and rebounded very nicely as it is up more than 30%. And now the stock is at $110 per share. It now has a market cap of $197 billion, as you can see, revenue grew by 3.4% last year, net income by 149%, and EPS by 151%, so a lot of growth in profit. And the company is now trading at a P/E ratio of 16, so off the bat it looks cheap. But let's take a deeper look, starting with the financials. As you can see here in their 10-year revenue chart, revenue was growing very nicely, but they took a big hit during COVID. Now this is obvious because parks were closed. However, since then they have recovered very nicely and they are now at an all-time high at $94 billion. However, we have to take into account that Disney is not a fast-growing company. As you can see, in the past 2 years they have grown at low single-digit growth. Now, if we take a look at their profit, this is where they were struggling a lot more. As you can see, during COVID, they took an even bigger hit from $12 billion in net income all the way to negative $2 billion. And they were struggling to grow this back again on like revenue. However, in the past year, it seems like things are back to normal and they are now generating $12 billion in net income, which is what they were doing prior to COVID. Now, if we take a look at their free cash flow, we're going to see kind of the same story, and they are now generating $10 billion in free cash flow. The same goes with their profit. As you can see, before COVID, they used to do around 15% profit margin, and then for a couple of years they were struggling to get back to that, but it seems that now it is on an upward trend and they are going to get things back to normal. And if we take a look at the financial forecast, analysts are expecting low revenue growth, which is what Disney has been doing. As you can see, low single-digit revenue growth for the next 4 years, growing from $101 billion to $114 by 2029. And as far as profit, a little bit more, but kind of the same, $6.68 per share this year, growing to $8.86 per share. Now, I think they're going to do more EPS, especially because they have been beating on EPS expectations, as you can see here, for the last 4 quarters. And one thing that I really like about Disney is how diversified their revenue is. If we take a look at the revenue by segment, they have for one aspect the entertainment side of the business. This is Hulu or Disney Plus. They also have the parks and experiences, and they also have the sports aspect of the business, which is ESPN. Now, as you can see, that is the smaller part at $17 billion in revenue. Parks and experiences represent $36 billion, and entertainment, the biggest part, $42 billion. And I believe Disney's revenue is in no danger because Disney's moat is one of the best out there. I mean, who doesn't know about their parks, or who hasn't watched any of Disney's movie? In fact, Disney is now the 3rd largest streaming platform in the world behind Netflix and Amazon Prime, with 131 million subscribers. So the fundamentals look great, but now going back to their financials, Disney has an okay balance sheet, as they have $5 billion in cash and $45 billion in debt, which in my opinion is some debt, although Disney is such a large and known company that I believe this is manageable, and also they have a market cap of $198 billion. Now let's take a look at the valuation. As we've said before, they are currently trading at a P/E of 16 and price to free cash flow of 19. But in order to take a deeper look at the valuation, I use my Google Sheet. This tells me at what price you should buy your stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $96 per share, middle $134, and high $180. So I would say Disney is trading around fair value or even slightly undervalued. In fact, if you want to know the exact returns, if my low assumptions occur because the stock is currently trading at around $110 per share, you would get a 7.5% annual return on your money, middle 13.6%, and high 19.4%. So these are great returns, and I would say Disney is definitely undervalued at the moment. And I believe my assumptions are reasonable, as I have Disney growing revenue between 3 and 6% annually for the next 7 years, averaging a profit margin and free cash flow margin between 11 and 15%, and I assigned the PM price to free cash flow at the end of the 7 years of 18, 20, and 22 because although Disney is not a fast-growing company, I definitely think it deserves a premium over the market average of around 15 because of their moat. But if you want to make your own assumptions, I'm going to leave a link to a spreadsheet down below. It is super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. And also very quickly, I want to mention that Disney pays a dividend that currently has a yield of 1.35%, which means it pays $1.50 per share annually per share, and the payout ratio is 21%. This is what percentage of their net income or profit is used to pay the dividend. And I would say anything under 50%, it's a safe dividend. So this dividend is definitely safe. And before giving my final conclusion on Disney stock, if you want access to stockanalysis.com, which is the best place for stock data, which is where I've shown all the data in this video, you have my link in the description. They also have a bunch of tools which are very useful when analyzing stocks, and also a free market newsletter that I will leave in the pinned comment below. In conclusion, I believe Disney is a very solid company. Fundamentals are amazing, moat is fantastic, and the company is undervalued. Now, I personally don't own Disney just because I believe there are better opportunities in the market out there. I would honestly be interested around Disney, around $80 per share, so hopefully it falls on earnings and we can take advantage of that. I hope you found this video valuable. Let me know what you think about Disney stock in the comments, and I'll see you in the next one.